All right, so let's talk about what it really takes to really understand which way to trade. You always hear people talking about the market trending. Yes, what does that mean? Is the market making higher highs and higher lows, or lower lows and lower highs consistently, where it's breaking areas of structure? Market structure is very important, whether you're trading the E-mini S&P 500 futures or the NASDAQ or maybe GC gold or whatever it is that is your poison of choice that you like to trade when it comes to the future markets. Now, when it comes to the trend of the market, we have to analyze to be able to see which way is it moving, all right? If we are consistently breaking structure lower, then as a trader of someone that trades or anyone that trades supply and demand, then we want to be looking for pullbacks to key areas of either aggressive areas of selling or buying. Those are your demand and supply areas, all right? So the number one thing to be on the right side of the fence is getting the direction correct. So for example here, let me show you, because I want to talk about the range bar strategy. What is that? Well, I trade specifically off of range charts, all right? And I'm using a higher base chart or a higher time frame, you may want to call it that, which is the 120. Then I'll move down to lower charts like the 60 range or the 24 range when it comes to trading the E-mini NASDAQ futures to be able to zero in on a specific key area in which I can actually trade. The strategy is very simple. If you're someone that's looking to make a living or profit on a daily basis, daily basis, of course, but on a monthly basis to make a living doing so. So let's say you have, for example, want to make $5,000 a month, right? What does that really entail? So that's basically breaking down to making $250 a day. That's all you need. Times 5, that's $1,250 a week. Times 4, right? That's going to put you at that $5,000 a month mark, okay? Times 12, that's 60 grand a year. That is enough money, to where somebody can definitely live off of, correct, right? But it all depends on, I know where you live at, what your expenses are and things of that nature. But an extra $5,000 a month can sound very good, right? To a lot of individuals. That could be money that you could put away for savings, for vacation, get caught up on bills, pay your car note off, pay your house down some, your mortgage down, whatever it may be. But any addition on what you can make as far as an income helps out in the bottom line, right? So when it comes to the strategy and looking at and trading off the range charts, what I like to do first and foremost is always to pick get the direction correct, right? Yesterday we were bullish. Well, the day before, this was last Friday. We were bullish, right? Yesterday into the overnight session, or Sunday coming to Monday session, we started forming a bearish direction to the downside. We pulled back slightly bullish yesterday after the opening, and then we've been bearish overnight, right? Until about 10 o'clock today. And then the market started doing what? Making higher highs and higher lows back to the upside, breaking structure. Right now we're kind of moving sideways. I'll say that, okay? So what you need to do is always start off on a higher time frame chart or higher base chart, and I'm looking for an area of either aggressive selling or buying, all right, supply or demand, but we got to figure out which way to actually look to trade depending on what's going on with the trend. So we're breaking things down when analyzing the charts, starting from basically a top-down approach, looking at a higher time frame chart and then scaling down to our lower base chart. So I like to trade what's called confirmation with confluences with a zone within a zone. So that's where I mark up my higher base chart first, and then I'm scaling down to a lower base chart to emphasize and take my entry off of, okay? Now, for example, I'm just going to show you real quickly here. If the market is making higher highs and higher lows to the upside, constantly breaking structure, we're looking for pullbacks to key areas of demand, okay? Like right here to the tops up here. We can see the market made a high, a pullback, and then it slightly broke above this area of structure right here. So that's what I like to classify as a slight break of structure. My demand zone is going to be like right here, okay? And then what I'll do is I'll mark it up on the higher base range chart first, and then I'll scale down to, a 24 range chart or even a 60 range chart to look for an opportunity or an entry to take the trade from. So on the 60 range chart, well, starting with the 120, I'll mark the zone up, okay? Then I'll move down for a more precise entry point and look right here. So the first box there is the 120 range. The second one, which is that red box, that's the 60 range chart right there. And then you could possibly even scale down to a 24 range to start zooming in or even find a more precise entry point. So that's what that does. By zooming and taking a top-down approach from a higher time frame chart and taking a scale-down approach, finding zones within the zones. So it's kind of clustering up areas or zones, but having multiple confirmation from multiple range charts, that's what's going to or helps me look for opportunities to trade from. So right here, I have double confluence in a sense, and really triple confluence almost in a sense. Well, I'm not gonna say triple because the market didn't come back to this 20,200 area. But right here, we broke structure to the upside on the 60 range, right? If we look at the 120, we also have a slight breaker structure. So when the market pulls back and taps into the 120 range demand zone there, I'm just going to go down to, say, for example, the 60 range and see if it's also tested an area of demand on the inside of that 120. So here's a 60 range area of demand too. Now I can take it directly off the 60 range chart, or I can move down to the 24 range chart and look for a even more narrow, precise entry point just as well. Let's look at another example right quick. Now, here's a trade right here. Let me show you this, where the market actually was reversing back to the upside, okay? So we came from a bearish direction. This is into today's trading session, and we started re-breaking structure or taking out areas or levels to the upside. So we went from bearish back to bullish to the upside. Here's a aggressive area of buying right here, and the market comes back and taps into a demand zone, okay, on the 120 range chart, all right? Now, the strategy is simple again. I will just scale down to a lower base chart, maybe preferably my entry chart, to look to see if there is a zone within this zone here, okay? So we mark up the higher time frame chart first using top-down analysis, and then right here, when we move down to, say, for example, the 24 range, which I would look at for possibly an entry, we can see the market comes down, right? But as the market is looking bullish on the 120, we start to look bearish on the 24 range, okay? So even though we start tapping into some areas below, like some demand zones on the 24 range chart, to possibly which I would look for that zone within a zone, I'm not quite sold that I want to take a trade the moment it starts coming back and taps into one of these demand zones below here, because we are now looking bearish on the the 24 range, but we're still bullish on the 120. So what I'll do is once it taps, say for example, let's mark this up right quick, put this on all charts, okay, and then so now I have the box drawn up on the on the 24 range chart so you can see it. Well, there's the same zone off the 120, but I marked it up so you can see it on the 24 range. So when the market comes down and taps into the 120 range demand zone, we're looking bearish now on the 24 range, okay? Bullish on the 120, but bearish on the 24. So sometimes your charts may not line up correctly. So what I'll do in this case here is that now that we're tapping to a higher base or higher time frame zone of demand, I'll look for the market to show me some type of reversal direction or pattern to where it starts to push back to the upside and look for an opportunity to go long off of my 24 range chart. But one thing to always be mindful of is that when you see like a beautiful demand zone resting right here, you got to look below because there are multiple gaps in areas in which they may want to come down and test below, right? So I'm very skeptical. I'm very mindful that when the market taps this 120 zone that it could come down lower. But with that said, it did tap the demand zone, the higher time frame chart. So now we're breaking structure to the upside. Push up, pull back, break structure, pull back, break structure again on the 24 range. Now, that's what I'm looking for, is a shift of direction in the market on this chart now, because on the lower base entry chart, we're bearish, but again, we're bullish on the higher base chart. Now the market's broken structure above this high and this high right here, pulls back. Now we have a key area of demand right here, as you can see, right? That's going to be my entry point, because now the trend has changed to the upside with the pattern to where we're breaking structure back to the upside on the 24 range chart. So now it puts us from back in a bearish kind of standpoint to now a bullish standpoint in line with the 120 range chart, if that makes sense. So this will be my demand zone right here. I'll take the trade at the break and close of the candle, and then the market goes up to the upside. I'm looking to try to capitalize depending on, got to pay attention to price action as well, but looking to try to always capitalize to make at least 20 points from the market. So if I get into a trade, say for example here at 19,918, the market runs up there to 19,945, for example, right? So that's almost 30 points right there. Definitely a 20-point pickup, or even if you pick up a 10, 15-point run, you can definitely do so. So the market pulls back right here. There's an area of demand, the 24. And what I'll be looking for is, because we have, a gap here, and gaps here that need to be filled to the upside. Right here will be my demand zone. I go long at 918. Okay, it pushes up. It does come back. This may scare you out the trade coming back tick to tick. Do not place your stop loss right there tick to tick. You got to give yourself some breathing room for the trade to breathe if you honestly want to take the trade and be in it. So if it does come back and stop you out right here and you got in here at 918 and you get out here at say 911, you know, you lost 7 points right there. But you want to probably give yourself at least 3 or 4 points additional breathing room to see if they're going to run to the upside off of this demand zone, because you have confluence there with the 120 range demand zone and the 24 range demand zone. Okay. So hopefully that makes sense. But this is all the strategy, you know, in discussion of the strategy surrounding how I trade range bars or range charts. Okay. Again, you can simply do this, picking up 250 on the day. Trading this way is, you know, a very good, solid strategy and technique. And if you want to find out more about the strategy and how I trade, please spend some time watching the video content. And anyone out there that really wants to break things down and really get more in detail about it, there's a link down in the description portion of the video to where I supply you with tons of trade breakdown videos, a video playlist, and a great video that I cover surrounding market structure as well. It's only $6.99 a month for all the video content. There are tons of those videos there surrounding the trade breakdowns. That's why those are the same trades that I take and post over on the Discord. I go back and I break it down for that private community. And yes, for all those that support my efforts as not only a trader, but as a content creator as well, I thank you for doing so by supporting that community. That's a private community where it's like you're sitting right next to me and I'm walking you through these setups, talking you through them from my perspective, okay? As if you're sitting right next to me, breaking down structure, breaking down where to place your profit target, where to place your stop loss, so that you understand structure as a whole and understand why I took those trades. Again, the link is down in the description portion of the video. The link is the Elite Channel Supporter or Member link there. Click on that. Make sure to choose the second tier for $6.99, and that's it. Now, if you're not a current subscriber, please take the time to go ahead, click on the sub button, the subscribe button. Make sure to turn on your post notifications so you do not miss any of the uploaded content that I post pretty much on a daily basis. And that's pretty much it, guys. I appreciate everyone for supporting my efforts here on the channel. Make sure to also click the like button, that thumbs up button. It helps the channel out, the algorithm, so that the video content can get to where it needs to go. All right. To anyone that's interested in a great strategy that actually works and a great strategy that can help you become a profitable trader on a daily basis. All right. Take care, and I'll see everyone in the next video.